Hello, family. Happy New Year, and welcome to this regional Queensland property market update for January 2025. I'm going to be diving in and looking at the 6 big regional hubs across Queensland and seeing exactly what's going on in those markets right now and forecast what's likely to happen in 2025. So, if you're an investor or someone looking at buying in one of these markets, in Bundaberg, Gladstone, Rockhampton, Mackay, Townsville, Cairns. Tune into this video, like and share it. I think you're going to get some tremendous value out of what's going to be covered here today. We're going to be looking at a combination of different data points to see what exactly is going on and what's likely to happen. Cheers, guys. I'm excited to bring this to you. Now, just quickly, if you are an existing subscriber, welcome back. Thank you for tuning in again. I really appreciate you. If you're new to the channel, my name is Troy Bassini. I am the owner and head of research of Life Buyers Agency, and we operate under these 2 specific brands in regional Queensland. Capricorn Life servicing the central Queensland region in Mackay, Rockhampton, Gladstone, and Bundaberg, and then Tropical Life servicing the North Queensland region, Cairns, Townsville, and the surrounding areas. And look, guys, we work with a lot of property buyers that need help navigating these markets, and we bought more than $500 million worth of residential investments in these areas. So we're very in tune with these markets, and we have people on the ground in all of these areas to help you mitigate your risk, but at the same time, maximize your upside. And if you are someone that maybe falls into that category of a struggling investor and you need help, you're busy, time poor, etc., feel free to give us a call on that number. Visit that website, and we can have an initial chat with myself or one of my team members to see if we can help you get into the marketplace and buy you the investment or home that you are looking for. Now, the first market we're going to be jumping in and looking at today is Bundaberg. Now, before I do, I just want to quickly mention, look, no buyer's agent puts out this sort of content. I know a lot of buyer's agents, they try to keep a lot of the data pertaining to certain markets really close to their chest. They try to be the keeper of knowledge so they can charge you a massive fee for, their service. Whereas me, I'm more than happy to put this all out there because it's not about, me taking you on as a client. It's about me providing you with the necessary guidance and insight you need to help you navigate the market. Because I don't care if you use me, I'm totally fine. We only work with a select group of people anyway that actually need the service, that actually want the service rather than trying to appease to the masses. And look, I just wanted to say, this data and this information is free, and it's just my public service content that I put out there to provide value to you and the marketplace. And hopefully that value eventually comes back to me through some shape or form anyway. I put it out in the ether and something's likely to come back. So yeah, I just wanted to mention that, guys, before I dive in. Now, Bundaberg. So for those who are probably more sophisticated investors or follow data know that Bundaberg has had a massive couple of years, right? And I'm under no illusion that Bundaberg's had a massive couple of years because I know because we've bought there for the last 6 years and a lot of my clients have done really, really well. So the purpose of today is to understand what exactly is going on in Bundaberg right now and try to forecast and figure out what's likely to happen here in Bundaberg in 2025. And the way we're going to do that is by looking at a combination of demand and supply side data. It's pretty high level. I'm not going to dive into it too deeply, but we're just going to look at it at a high level demand and supply side data to figure out if that in 2025 there's going to be an imbalance between the two where the friction is in the marketplace, and obviously that friction between demand and supply causes house prices to go up. So we're going to have a look at Bundaberg now, and I'm going to work through these different data points. So we can see here that right now, as of January 2025, the median house price of Bundaberg is $619,000. And we can see here that the first point I'm making is that the year-to-date median house price has actually grown by 12.5% in Bundaberg from $550,000 in January 2024 now to $619,000 in January 2025, resulting in a total growth rate of 12.5 and 69 $12,000. So look, yeah, as I said, Bundaberg had this massive run over the last couple of years, and it's still on a good run. Like over the last 12 months, you could have made 12.5% potentially there if you did invest in Bundaberg. And I know a lot of people actually threw Bundaberg out with the trash because they said it had grown too much. But we were buying in Bundaberg, in all of the blue chip areas where we saw really good value assets, and they've all done really well. And I really like this median house price still, like 619,000. I think it's still very cheap. Looking across the regional Queensland hubs, I think it's still one of the cheapest. And if you compare it to its neighbour down the road in the Sunshine Coast and Harvey Bay, it's probably a half a mil cheaper than the Sunshine Coast and about $100,000 to $150,000 cheaper than Harvey Bay. And I know a large cross section of the buyers in and around Bundaberg are actually pushing up from the southeast Queensland market where properties are a lot more expensive, and they're moving into markets like Bundaberg right now. And I actually recently worked with a family that moved up from the Sunshine Coast, and we got them into the Bundaberg East Coast. And for that exact reason, they couldn't do much with their money down there, so they pushed up into somewhere like Bundaberg and decided to put down roots there instead. So I like that median house price in terms of it being affordable for people still intra-regionally, right? So that's why I think that going forward, this median house price even has a lot of wiggle room to keep going up. But is it going to go up in 2025? We can only now really look at the demand and supply side data as a point in time now and try and anticipate, what's likely to happen going forward. So the first demand side data I'm going to look at here is days on market. Now, all days on market reflects is how long does it take for a property to actually sell in that marketplace? And the lower the day on market number means that the market is hot. And on average here, a really strong day on market number in regional Queensland that where properties are really hot and where you're likely to get really good double digit growth. Most of those markets have a day on market figure of around 30 days or less. And when you're slightly above that, let's say around that 60-day, the market isn't as hot. But when you're around that 40-day, the market is still pretty hot, but it's not exactly a frenzy. And we can see here that Bundaberg right now averages 44 days on market currently, and it's actually down 14 days compared to this time in January last year. So for that to be down 14 days, it would have fell from a figure of about 60 days. Now it's dropped right down to 44. So look, if the last 12 months has done double digit growth, 12.5% in Bundaberg, and now we're seeing that the days on market's even lower. So that means supply has really picked up. So is that now going to be a prerequisite to another year in Bundaberg where it's going to be double digit growth? Because if this demand is going to be strong and supply remains low, then that's inevitable basically. So we can see here now that the stock levels in Bundaberg is currently sitting at 0.2%, and actually when compared to this time last year, it was at around 0.3%. So the stock has tightened even more, and then inventory levels are currently sitting at 3 weeks. So all the inventory pool means is that if the property market became redundant tomorrow and agents were no longer listing properties, it would take roughly 3 weeks for all of that existing stock to be cleared out. So that just goes to show that there is a lot of demand in that marketplace, because sitting at 3 weeks from an inventory pool is really low. Like most places where the markets are tanking and going backwards, inventory sits at around 3 or 4 months. But for us to sit at 3 weeks in Bundaberg just goes to show that stock levels are really tight. And if you have stock levels tightening and demand increasing, obviously that's looking likely that Bundaberg is going to rise again in 2025. And if we actually looked at listings specifically over the last few months, we can see here that listings have decreased 44% from an average of 175 in November 2024 to 121 in January 2025. But look, in saying that, guys, I'm not going to look too much into that listing decrease, because that specific time period leading into Christmas, listing volumes do taper off. A large portion of the market goes to sleep and then wakes up again January, early February. So I won't read too much into that specific data point there. What I'm really liking though is that stock levels are extremely tight still, inventory pools extremely tight, and then days on market has dropped, so demand has increased. So look, as I said, I think that's a huge prerequisite there, or an early indication for the market to keep rising. And look, guys, this is all just point in time data right now, and I am comparing it to some data we were able to extract from this time last year. But what I'll actually be doing very shortly is diving into Bundaberg more deeply. I'll do a specific, more in-depth property market update for Bundaberg in the next couple of weeks, where I'll actually show you the graphs and charts of these individual data points and their trends so you can actually see it in its entirety. And that will generally be a 45, 50 an hour long minute presentation in itself as well. So if you are someone interested in Bundaberg, just keep a lookout for that in the next couple of weeks. So yeah, we can see here that on the supply side, um, things are really low, and on the demand side, things are strong. Now, if we pivot and look at the rental market, because I know a lot of people are looking at regional Queensland to chase some really juicy rental yields as well. We can see here that Bundaberg, the rents have also increased, not double-digit growth, but it's done 9.2%, and it's actually grown from $434 per week to now $474 per week. And look, that's a really good growth rate, I think, over the last 12 months as well for that rental market to continue to grow. And I think that $474 per week is still very affordable, particularly when you start to compare it to other rental markets that are more expensive as well, and not only in regional Queensland, but around that southeast Queensland corridor. Rents on average are like, close to, eight, 900, $1,000 per week in Brisbane and then the Gold Coast. And you can move into a regional hub like Bundaberg and you're paying sort of half that roughly. But again, this is the aggregate here. This is the aggregate of all the suburbs sort of clustered in, and then the medians pulled out of that. There'd be many suburbs within Bundaberg where the median rent's sitting like $600, $800 per week. Like the last couple of properties we bought in and around Bundaberg, they're renting for close to $700 per week. So if you are looking at investing in Bundaberg, just go in and do your individual research on individual suburbs, because what you'll actually find is those median rents per week are actually a lot stronger than the Bundaberg aggregate. And the same would go for the median house price as well, guys. There are suburbs in Bundaberg where it'd be very difficult to even buy with that $620,000 budget. Particularly on the Bundaberg East Coast, particularly around Ashfield and Kalki, you'd be lucky to push into those sort of suburbs. Branyan even on the north side of Bundaberg with those budgets. So yeah, just be mindful of that. Is when you go into this market, you have to do your individual research. Now, from a vacancy rate point of view, we can see here that the rate is currently sitting at 1.1%, and it's actually down from this time last year from 1.2% in January 2024. So what we've actually had is growth over the last 12 months of 9.2%, and now we actually have a tighter vacancy rate. So what that suggests to me is that if the vacancy rate continues to get tighter than what it was this time last year, we're likely to see even more growth than that 9.2%. I think Bundaberg is probably likely to see double-digit growth if this rental market continues to contract here. And look, I've actually summed it up here right at the bottom. My predictions for Bundaberg this year is for the market to have double-digit capital growth and for the rental market to have double-digit capital growth. Just by looking at this point-in-time data now, I'm really liking what I'm seeing, and I can't really see too many things throwing this market into a downturn anytime soon, because I know supply levels, the pipeline of supply, particularly new construction, is still very tight. There's not a lot of active building approvals in the pipeline for Bundaberg, so that new supply wouldn't really come in and create a whole bunch of supply saturating the market for the median house price to slow down, and also for those median rents to slow down. So I'm anticipating for Bundaberg to do double-digit growth here, guys. But as I said before, I will be deep diving into Bundaberg again in the next couple of weeks. And if you want a more in-depth analysis around Bundaberg, the data and its trends, feel free to tune into that, guys. But if you have any more questions and comments about Bundaberg specifically, feel free to leave a comment in the comment section. I'll circle back and make sure we get that answered for you as well. Now, moving north, just down the road from Bundaberg is Gladstone. So if you are someone that's interested in a market like Gladstone, I'm going to go through the same sort of data points we looked at for Bundaberg. Now, if you actually went back and had a look at one of my old videos I did on Gladstone last year, very early on, I think it was around February, March, the data for Gladstone was really starting to shape up and the market was looking really primed for a huge year. And as you can see here, in the last 12 months, Gladstone actually did go on to have quite a big year, and the market's grown the median house price by 19.1%. So if you want to see what happened with Gladstone last year and the data, how it all started to come together, feel free to circle back and have a look at that video. I'll leave a link in the show notes for you as well. So now, Gladstone, the median house price currently sitting at $678,000. So it's actually way more expensive in Gladstone than it is in Bundaberg, despite Gladstone being a much smaller regional hub as well in terms of its population and size. I think Bundaberg has, circa about 100,000, just over 100,000, and Gladstone's probably sitting more around that sort of 40, 50,000. So it's virtually half the population base, but I'd say what, $60,000, $70,000 more expensive, which is very interesting, right? For a much more smaller town to be outperforming a larger town, but we'll get to that in a sec. So look, just on that median house price, yeah, $678,000. Well, it's a hard one for me to say that Gladstone is still affordable because, as I said, that population base isn't as strong as the other big regional hubs that have a much more larger population base, and then their net population numbers are a lot better. I think what's really driving the Gladstone median house price, to this high premium right now is that Gladstone is a big net contributor to GDP in Queensland. So it has some big industries in the area, and those industries are big employers. And what comes with some of these big industries is big incomes as well. And those big incomes can really drive up prices as well. When you have a lot of borrowing power, people can certainly keep pushing up that median house price. And I think Gladstone, because it's such a huge net contributor to the Queensland GDP, a lot of people, in fact, are well paid. And as a result, that median house price just continues to chip away despite it being a lot more smaller hub. So we can see here that, over the last 12 months, it's grown by 19.1% and actually come off a base of $569,000. So a total of $109,000 you could have made really in the last 12 months. And look, in certain suburbs, like as you dive into certain suburbs like New Auckland, Glen Eden, Kinkora, you probably could have made like at least $160,000, to be honest, like on a per property basis. Like some of the suburbs just went absolutely crazy. And look, it just wasn't from the investor market flooding in and really propping up those prices. I know, in fact, a lot of the demand was actually driven by local buyers. So every open home, there would be close to like 40, 50 groups going through like properties over the weekend. And investors were also contending with these really desperate home buyers as well. So that combination of investors and home buyers really put a rocket up this market over the last 12 months. And look, can I see this market continuing to rise going forward, or this median house price? I do think there's a lot of affordability in certain suburbs in Gladstone that I think individual suburbs will do tremendously well, but I'm not entirely confident that the median house price will do another double digit growth rate in 2024. And that's largely because there's now a lot of uncertainty happening in Gladstone, particularly around the major renewable investments that was proposed. There was like a pipeline of, multi-billion-dollar pipeline of projects proposed for Bundaberg that were all positioned in that renewable energy space, including Andrew Forrest's massive hydrogen project. But I know all of that's on ice now, and a lot of that is largely dependent on this next political cycle. So, moving into an election, a cycle, a lot of the big projects now hinges on, what the next government anticipates to do. And I just think with a lot of that uncertainty, I can't really see a lot of investor confidence, in Bundaberg now over the next couple of years. And even a lot of the big industries now, I can probably see them slowing down a little bit, and because of that sort of investment now, or that pipeline of investment and the uncertainty around that. So I think that's why I believe Bundaberg in 2025 is likely to slow down. But we can dive in and have a look at that data here now from a demand and supply side point of view, and it also sort of starts to paint a bit of a picture for us too as to what might likely to happen this year. So we can see here that days on market currently sits at 42 days, and it's actually currently down by 15 days from January 2024. So yeah, this time last year the market wasn't as hot. So there's been a massive variation in that days on market there. Is that a prerequisite for ongoing growth? It well and truly could be. But as I said, I think there's still a bit of a cloud hanging over Gladstone currently. We can see that their stock levels are still very tight at 0.3%, and there's actually 27 fewer listings than there was this time last year. So stock levels are even tighter again. So demand is stronger than it was this time last year, and stock levels are tighter than it was this time last year. Bundaberg went on to do 19.1% growth. Who knows? The market might prove me wrong. I'm calling single-digit growth, but by looking at those two data points, they're this at a point in time. Like it's almost a prerequisite to say that the market is still going to continue to do what it has been doing over the last 12 months. But yeah, I'm going to be a bit more conservative right now. And we can see here that the inventory levels now are sitting at an all-time low at 7 days. So look, I'm starting to really maybe talk my way out of my predictions here by looking at this data. But again, I'm going to stick to my point. But look, that inventory level, it's down to 7 days. So the market will clear out in 7 days. Um, and it was sitting at 1 month this time last year, and now it's 7 days. So look, that's extremely scary to know that, out of all the properties that are currently available for sale in Gladstone, it'll take 7 days for demand to clear them out. And this would, be, I would say, in the top 1% of the country right now when it comes to really low inventory levels. And this is Gladstone as a whole. If you dive into individual suburbs, that listing volume, stock levels, and inventory pool is actually even more tighter. So it's very difficult to buy all round for both home buyers and investors. And we've managed to sneak a lot of people in there, a couple of years ago when the market was flat with the anticipation that it's going to rise. But, over the last 6 months, I haven't necessarily touched Gladstone as much due to that uncertainty around what's happening with some of those big renewable energy projects. But look, guys, I'm going to do another market update anyway. I'm going to dive in and have a look at, not only the point in time data, but then the trends of the data, and let's get a feel for, how 2025 may likely to play out. And who knows, I might prove myself incorrect there when I dive into the data and evaluate this market again. But I'm predicting Gladstone to have single-digit growth, capital growth in 2025, and the rental market to actually have double-digit growth. Because if you actually look at the rental market data here, we can see here that rents have increased 15.5% from $369 per week to $419 per week. And the reason why I think the rental market is going to have double-digit growth is because that $419 per week price is so cheap, right? I still think that I can get to at least 450, 460 by the end of the year. And just by it getting there alone on affordability, it's going to do double-digit growth, right? And even though the vacancy rate, as you can see here, the current vacancy rates for Gladstone are currently sitting at 2.5%, and they're up from 2% in January to 2024. So we actually have a higher vacancy rate now in Gladstone than this time last year, but I'm still anticipating for there to be double-digit growth purely based on affordability. But if you are an investor, that's probably something you'd have to be careful of. If that vacancy rate continues to go up, then that just means that there might be, a period of time there where you might buy a property and it might go a couple of weeks on the market before it is rented rather than rented in a heartbeat. Or you might not get that juicy rental yield overall because there's so many properties in the same suburb because of that high vacancy rate, that high level of supply, you're not getting that premium rent. So what should be $600 per week, you might only get a tenant in there for 560 or 560 if this vacancy rate continues to rise. So that's something to keep an eye on. But yeah, when we compared the vacancy rate to this time last year, you can see there is been a bit of a jump there. And that jump is around 19 more new properties. And if you have 19 more new properties coming on than this time last year every month. And obviously, that's a bit of a worry if for me if I was an investor looking at somewhere like Gladstone. But yeah, guys, that's sort of Gladstone. As I said, I'm going to dive in and do a bit more of a deep dive into Gladstone in the next couple of weeks as well. So keep a lookout for that market update. But I'm anticipating single-digit capital growth, and then the rental market to have double-digit capital growth, double-digit rental growth. But yeah, we'll see what the vacancy rate does, and if it continues to go in this direction, I might have to retract on that statement of double-digit rental growth. But yeah, guys, if you have any questions about Gladstone, feel free to leave a comment in the comment section, and I'll circle back and answer that also. You drive 1 hour north of Gladstone, and you end up in Rockhampton. So they're actually really close by in terms of like the regional hubs. I think Rockhampton and Gladstone are the closest regional hubs to each other, and then I'd say Bundaberg to Gladstone is about 2 hours. Rockhampton to Mackay is about three. Mackay to Townsville is about five. And then Townsville to Cairns about 4 hours. So Rockhampton and Gladstone, they're like, big brother, little brother markets. But, being so close are actually so different in terms of their economic makeup, the township, feel and demographic. Very, very different despite them being so close. And if you're lucky enough to go and check them out, one day, definitely go down to a place called Tannum Sands in Gladstone. It's a really beautiful beach, and has actually been a really popular suburb for a lot of investors and home buyers over the last 12 months, and has done some huge growth as well. And if you're ever in Rockhampton, well, there's not too much to see in Rockhampton, but yeah, I'm pretty sure you'll be able to find something to do. So, look, guys, let's dive in now and take a look at good old Rocky. So Rocky has had a big couple of years again, similar to Bundaberg, but it's come off a really low base as well. So the median house price going back to 3, 4, 5 years ago was around that sort of $350,000, $400,000 mark, and now it's well and truly pushed up into that low 500s right now. So some would say that Rockhampton it's past its peak now, or it's had its run, and it's no longer got any growth left in it. So I know there's been a lot of big buyers agents that used to buy in this market have now moved on and not buying here as frequently, but there are still others that see really good value in here, and I still think Rockhampton has a bit of movement in it. Does it have double-digit growth? I think yeah, my predictions are at the end of this presentation. I'll get to that in a sec. So look, we can see here that the median house price for Rockhampton is currently $529,000. And we can see here that the year-to-date median house price has grown by 20% over the last 12 months. So it's come off a base of $444,000 to now $529,000. So a total, I suppose, growth number of $85,000 there. And look, guys, this is just the aggregate here I'm talking about, so the median. But there are plenty of suburbs that have done a lot more than that in terms of its growth rate, and some of them have done a lot less. So just be mindful of that when you are diving in and doing your individual research. Look, I really like this median house price still, despite it being double-digit growth over the last 12 months. I do see a little bit of growth left in it, but I am a little bit worried about certain markets in Rockhampton now being overly inflated or overpriced relative to sort of the demographic that's in those immediate areas. But there are other suburbs in Rockhampton where I still think there's some really good affordability there for prices to push up. Because if you actually compare Rockhampton to its I suppose neighbouring sub-regional hub in Yeppoon, Yeppoon is actually roughly 40 minutes or 40 kilometres east on the coast of Rockhampton, and that's been a very popular place as well for people that want their coastal lifestyle. And it's always been a market known to be a lot more expensive than Rocky, generally around that 20% more expensive. But what you'll actually find now is Rockhampton has accelerated that much, where the variation in price between Rockhampton and Yeppoon is actually not that much. So that's why I see Rockhampton being slightly overinflated in certain areas. So if you are an investor looking to buy in this market, just be mindful that, yeah, I think there are certain suburbs that have almost hit a ceiling, and there are others with, I still think, plenty of room to move there. But you have to treat every suburb and every property on a case-by-case basis. But yeah, looking at some of the point-in-time data, we can try and now predict, what's going to happen in 2025. So we can see here that from a demand side of the market, The days on markets currently sit at around 31 days currently, and it's actually down by 12 days from 43 days compared to last year in January. So again, similar to when we looked at the Gladstone data, days on market were a lot higher this time last year, and fast forward 12 months, it's a lot lower. So demand has increased in this market over the last 12 months, and we can see here now then that stock levels are sitting still very low at 0.3%. So there's actually, if you actually compare that to last year, despite it being quite low, listings have actually increased. So we can see here that there's actually 22 more listings than there was in January 2024. And this is something that I've noticed a little bit in Rocky, and it's a trend that I think you should hone in to and just watch going forward if you are looking at potentially investing in Rocky, is that stock levels are starting to increase now. We're actually seeing more stock on market than what we have over the last couple of years. And what that means is obviously that more stock, more choice, and that means that I suppose uh, less competition when it comes to properties being under a frenzy, because there are more options on the marketplace now. And what I've actually found is there's been a few properties, they've been isolated sales, but where they've actually had price adjustments. So properties might have come on for 600,000, but they end up selling for like 580 or 570, or they've had to adjust the price on the listing on realestate.com domain in order to attract a new type of buyer that has a lower price point. So there's a little bit of that happening, and I think it's largely driven by the amount of stock that's coming onto the market. And we're in January now, and I think there's going to naturally be sort of in an upkick in supply this time of year. But I think we're going to see this trend play out over the next couple of months in Rocky, where supply is going to pick up a little bit more. But if demand meets that supply, then I don't think we'll have a problem with this median house price. I just think it'll slow down a little bit, that's all, because that supply will be maybe enough there to sustain that demand, and it won't move as high at what it did over the last 12 months. So we can see here that, yep, 22 more listings, and it's something that we'll have to keep an eye on now going forward. And I'll do another market update for Rockhampton, a deep dive similar to what I mentioned about Gladstone and Bundaberg. I'll do one for Rockhampton in the next couple of weeks as well, where we'll actually dive in and actually see the trend line of how the stock levels are starting to rise, and how the listing volumes are going up, and what that would mean, and if days on market is starting to flatline now, or is it continuing to go down. So that's going to be an interesting analysis when we dive in and have a look at Rockhampton. And look, to accompany the stock levels, we can see here that inventory levels currently sit at 3 weeks, and it's actually increased compared to 1 week it was this time last year. So inventory has gotten fatter, and obviously that's because the more stock, as I mentioned before, there's more stock on the market now, so the inventory is going to fatten up naturally compared to this time last year. So this is something that I am a bit worried about for Rockhampton. If there continues to be a fattening of inventory, and then an increase in supply, and it's not being met with equally strong demand, that median house price can probably really start to slow down or even contract. So yeah, as I said, I'll be watching this data very closely, and I think you should too if you are looking to invest in this market in 2025. Now, on the rental front, we can see here that year-to-date rents have increased in Rockhampton over the last 12 months by 6.4%, from $437 to $465 per week. So an increase there of roughly $30 per week. And again, as I've said with these previous markets, there are other suburbs within Rockhampton that are outperforming that growth rate and are a lot more expensive to rent in. So just do your individual research, because some of the properties that we bought over the last couple of months, they've all had a 6 in front of them when we put them on the market for rent, or a high 5, so they've really outperformed this. And the same would go for the median house price. Again, you'd struggle to get into suburbs like Parkhurst, Rocky View, the Range, parts of Frenchville, parts of Norman Gardens with that median house price of $529. Purchase price budget, you'll really struggle. So just be mindful of that also, is that your buying power, despite the median house price being $520, you might not have the buying power to go into some of the more blue chip areas. You might have to look at its neighbouring suburbs where the budget does cater to. So we can see here, yep, rents have gone up over the last 12 months, and then the vacancy rate now currently sitting at 2%, and it's actually up um, from this time last year from 1.5%. So, and that equals an additional 18 more listings. So we've had an increase in stock, and we've had an increase now in rental stock. So the vacancy rate now starting to balloon out. And I think this vacancy rate ballooning out, I think it's largely driven by the amount of investor activity we've had in Rockhampton. A lot of investors have really pushed into, you know, popular investment hotspots like Gracemere, Frenchfield, Norman Gardens, and it's really saturated the market with a lot of rental supply. And I think that rental supply, as a result, has really um, ballooned out that vacancy rate. Look, if the vacancy rate continues to get tighter, then I think we're likely to see small growth to happen on the rental front. But if it continues to balloon out, it's going to be a bit of a worry there because if you are going to invest in Rockhampton, you just have to be mindful that it might take a bit of a while for your property to rent, and when your property does rent, it might not rent at an absolute premium due to the sort of the high volume of competition there. But if the vacancy rate really tightens up, then that's going to be a really good thing. And look, the only way we can anticipate vacancy rates to tighten if I think if supply really, the pipeline of supply also really tightens up. And look, the pipeline of supply isn't that great. It's pretty grim, like the new supply pipeline. There's not a whole lot of building approvals that I know of that are happening in and around Rockhampton. Like mainly the new supply can really come in markets like Parkhurst and Gracemere where there is that land abundance, but like you go out and drive around in those suburbs, you'll barely see any construction workers there constructing new properties. And the properties that they are building, they're just mainly for first home buyers as opposed to investors. So, look, the only thing that investors I think should be worried about is that stock level, that inventory pool, and these vacancy rates. So just keep an eye on Rockhampton if you are looking to invest here, guys. But my prediction is that due to that, um, that supply on the rental side and on the buy side, I'm looking at Rocky to have single digit capital growth this year, and on the rental market to also have single digit capital growth just by looking at the point in time data now. It's not looking overly great for Rockhampton, but nonetheless, things could change, in the next couple of months as well, and we might see Rockhampton, turn the tides turn and it go on to do double digit growth this year. Moving on to Mackay, good old Mackay. So we can see here that the median house price for Mackay right now is $613,000. Now, just on that median house price, Mackay again is very similar to Gladstone in a sense where it does have a lot of big industry in the area, and those big industries have a lot of high paid workers, and those high paid workers are definitely, I think, contributing to this median house price and its growth rate over the last couple of years. And Mackay is one of those places that when it's pumping, like it's pumping, everything is going good. Everything is trickling down into the housing market when the economy is surging along, and it's certainly surging along right now. Like coal is going really good right now. There's new mines popping up left, right, and center in and around that coal basin, and a lot of the people that are moving into the coal basin to chase the work that's there are generally using Mackay as their main base. So that puts a lot of upward pressure on the median house price, and then obviously it puts some downward pressure on those vacancy rates at the same time. But yeah, it is one of those markets that probably hasn't had the best track record, prior to the last 5 years, due to a lot of the uncertainty around mining, the coal downturn, and things like that. But yeah, it's really made a bounce back over the last couple of years, and I take my hat off to the Mackay Regional Council and the Mackay Chamber of Commerce as well. They've done a lot over the last decade to really diversify the economy now. So it's not just a old mining town or a one-trick pony town. Now it's a very diversified economy as well. And one of the things that Mackay has, I think, over let's say somewhere like Rockhampton and even Gladstone, is that it has a lot more stronger lifestyle market. So a lot of people actually move into the Mackay region purely for that lifestyle uh, amenity, to be close to the beach, to be in a relatively small town that has a lot of the public service infrastructure needed to cater for people like retirees or people that are working remotely now. And Mackay definitely has that appeal with its warm weather, its sandy beaches, its proximity to the Whitsundays as well. So people can be still based in Mackay but shoot up to the Whitsundays for a weekend or a long weekend as well. So that's made it a really popular lifestyle destination. I think that's really also contributing to its median house price. And look, that $613,000 median house price, as I said, there's a lot of well-paid people in the area, so I still think this median house price can push up. I definitely think it can get into the 700s by the end of this year, or low 700s that is, or very very high 600s. I think there's still plenty of wiggle room in that median house price. But yeah, let's have a look at the data now and see what Mackay is going to do in 2025. So we can see here that the year to date median house price has grown 15.6% in Mackay, and it's come off the base of 530,000, resulting in a sort of a total growth dollar amount of $83,000. So yeah, it's definitely pumping over the last 12 months, double digit growth there. And funny enough, like if you actually go into certain suburbs um, within Mackay, like some of them have done 20-25% growth. Like they've done some really big numbers, but majority of those suburbs that have done those really good double digit growth rates have really come off a low base. So you could have bought for around that sort of $400,000 price point, even high threes at the start of the last year. And by the end of the year, they were selling for like, mid to high 400s or low 500s. So really big growth in those. It was particularly around that North Mackay, like South Mackay, uh, East Mackay area. Like those areas were absolutely pumping. I know now, like all of the Northern Beaches areas, like the Bucacia, Blacks Beach, you could have got them there, Shoal Point. You could have got it to those markets with about a $550,000 budget last year, and then the year before that, you could have probably bought around that mid fours. Now you're looking at a minimum 600,000 just to get into like your basic 422 brick home in those areas. But I do think those areas can even still push up into the sevens, just because they're just so popular for people that are commuting to the nearby mines. Like a lot of them like to be around the beach there, and then obviously all those northern beaches areas help have the better subdivisions as well, the nicer sort of 422 brick homes. Whereas all the established areas of Mackay, like you get a lot of like older Queenslanders cottages, 3 bedroom, 1 bathroom. So there's not a whole lot of really good quality stock around the inner middle ring of Mackay. A lot of it's sort of pushed out into the northern beaches. So I think the northern beaches still has a lot of wiggle room to push up, this year as well. Now, looking at some of the data around demand and supply, we can see here that days on market currently is down 9 days from 39 days compared to this time last year. So we've actually had an increase in demand. And last year went on to do 15.6% in growth, and here we have demand increasing again to what it was last year. So like again, that could be another prerequisite to another big year here in Mackay. So let's continue to dive through this. Stock levels sitting at 0.2%, so it's actually 40 less listings than January 2024. So look, you have demand really increasing, stock levels contracting even more to 40 less listings compared to this time last year. And if it continues to maintain this trend, extrapolate it out over the next couple of months, and then even over the next 12-month period, like Mackay would be in for, another cracker of a year just based on looking at those two metrics alone there on the demand and supply side of the market. Inventory levels sitting at 1 week now compared to 1 month. So look, it's just getting better and better for Mackay overall. 1 week, that's crazy as well. The market very similar to Gladstone. I would put Mackay in the top 1% of the country now, where inventory is that low now. It would only take 1 week to completely clear out all the stock that's there. And look, I've been speaking to a few agents now. We bought a lot of property in Mackay, and we're still buying a lot of property in Mackay this month, and we bought heaps last year. Like buyers are just fighting over property. Things are going under contract almost instantly. And then what we're actually finding is that the local buyers are having to contend with not only investors, but people that are trying to move into the area from out of town because they're coming in to chase that work. So the rental properties are getting snapped up, and then the homes are getting snapped up from intra-regional and interstate buyers as well. And I think that's really contributed to that sort of massive reduction in stock, that increase in demand, and that contraction there of that inventory pool over the last 12 months. And it's just put a lot of pressure on that median house price to go up, and then that median rent to go up as well. Because if we pivot now and look at the rental side of the market, we can see here that rents have increased 11% over the last 12 months from 490 to $544 per week. Yeah, huge numbers there on the rental side of things. And I think that rental figure can also, like that median house price, continue to push up as well, largely due to the fact that I think there is still a lot of wiggle room in people's household budgets for the rents to keep rising, and there's still enough macro and micro pressure there that's putting strain and pressure on that rental market to keep pushing it up. And I do think that rental market will at least get to 580, 590 by the end of this year. I wouldn't be surprised if it pushes into the 600s, particularly if the vacancy rate starts to contract this year. But the data actually says the opposite, that the current vacancy rate is actually sitting at 1.6%, and it's actually up from 1% this time last year, and that means that there's 35 more new listings. So I just said that the rental market could grow, but it's only going to grow if that vacancy rate starts to contract back down. And if that trend continues of more and more listings to happen, I think that we might see a slowdown in that median rent. But I just think that vacancy rate has spiked, mainly due to this time of year, more properties have come on for rent. That from agencies that didn't necessarily list them, this time, not this time, around that November, January, December period last year. So we have a small increase in new supply from the rental market. But if you are an investor, just got to be careful. Just watch and monitor that data and look at its trend, particularly if you're looking at getting into someone like Mackay in the next few months. I'd be watching that vacancy rate trend. And if it's continuing to balloon out, that's when we know there's a bit of a problem there. There might be actually a lot of investors pumping that market up and buying a lot of the available housing stock there and converting them from owner-occupied residents to investments. And then that's causing more and more rental supply to come into the market, and then that supply isn't being met by that strong demand, and that rental vacancy rate is ballooning out. So just be mindful if you are going to invest in Mackay is to look at that. But my prediction, I think, overall is based on the demand and supply side, with the days on market really dropping over the last 12 months and the stock levels contracting and the inventory pool just as tight as it is. I still think that Mackay is likely to do double-digit growth again in 2025. And with the rental market, I think right now, just by looking at the point in time vacancy rate of 1.6%, I'm not liking that per se. I still think that the rental market will grow, but it won't do double-digit growth. It'll do single-digit growth here in Mackay. And again, similar to what I mentioned about these other markets, I will be jumping in and doing a more of a deep dive analysis into Mackay and pulling out these data points and showing you the trend line and the graphs, so you can really get a really crystal clear idea around what's going on in the marketplace. And keep an eye out for that. I'll be releasing that in the next couple of weeks as well, guys. Moving from central Queensland now into North Queensland, starting with Townsville. So Townsville, yeah, it's one of those markets where every man and his dog's been talking about Townsville, over the last 12 months, and it's been a very popular investment hotspot. I'm under no illusion that a lot of investors, buyers agents have been investing in Townsville. And yeah, I suppose, what I wanted to do today with Townsville, for those that may be late to the party or think that they're late to the party, get an understanding as to whether or not Townsville is still the right choice for them. So we're going to dive in and have a look at what the data is telling us today, and see whether or not the market's going to continue to do what it has been doing of late. So yeah, Townsville currently has a median house price of $594,000. So yeah, you can see there it's not too far behind Mackay. It's about 40 grand less than Gladstone, And yeah, it's for a big town like Townsville, one of the things that I've always said about Townsville is that this run that it's currently on, and the last couple of years and the last 12 months, even what it's done, I wouldn't necessarily see it as a boom. I more or less see it as a correction. I think it's just correcting itself to what it should be, because Townsville is the biggest regional centre outside of Brisbane, right, in Queensland, by population, by infrastructure. You know, it has everything there that suggests to me that it should be the big dog, or the big regional um, property market when it comes to the median house price. So I just see Townsville right now more or less going through a correction more than anything. It's had a sleepy, almost decade there where the market's done next to nothing, and there was a bunch of contributing factors, that played into, why Townsville did that, but they're no longer in existence. And I think the Townsville Regional Council and Townsville Enterprises have done a really, really good job to bring a lot of investment into the area, and that's really now starting to trickle down into the housing market. But that $594,000, as I said, it's correcting itself to, I think, what it should be. And I think even right now, it still has a lot of wiggle room. I just think right now, Townsville, based on its size, based on its investment, based on it being the biggest regional hub outside of Southeast Queensland, like, it should have a median house price of at least $720,000. Just when you start to compare apples with apples across the board, that's really what it should be. So that's why I'm very bullish on Townsville still, because I still think its median house price should be around that 720 price point. And I think over the next couple of years, it's definitely going to start to live up to what it should be, and really start to correct itself. And then from there, I think if the market continues to grow, that's where the boom occurs. Right now, until it gets to about 720, everything's just merely a correction for me when it comes to Townsville. So we can see here, over the last 12 months, it's had a big year, 26.1% growth over the last 12 months. So it's done some really big numbers there. So you could have bought in Townsville for around 471,000 there, like, a property, an average property. And now you're kind of looking at that sort of 594,000. So there's been a total sort of, dollar value growth rate of $123,000 there. And this is just aggregated. Like, if you go into some individual suburbs, like we were buying in a suburb called Heatley, for example, when properties were like 350, we picked a couple up there for 330, 340, and now everything there's like 520, 480, 490. Like, that's how much growth they've had just in a short 12-month period. And then even out at Mount Louisa and Bushland Beach and Mount Low, you could have bought a brick home, 422 brick home there for like 500,000. Now they're all like 620,000. So they've done huge growth over the last 12 months. But I still think even a lot of those blue chip suburbs have a lot of wiggle room to keep pushing up, I believe, over the next couple of years, because those blue chip suburbs, even when I compare those blue chip suburbs to the blue chip suburbs down the road in Cairns, right? Like, there's a lot of discrepancy in terms of their median house price versus the blue chip suburbs in Cairns. Cairns, with the same demographic, I think in suburbs like, let's just say, Edge Hill, Canimbla, Redlanch Valley, Bentley Park, like those really blue chip areas. What else? Stratford. In Cairns, you can pick up, like, the average purchase price for a property there is like 750, 800,000. But when you go into the blue chip areas of Townsville, like, you can still get something really, really nice for like 620, 580, you know, less than $700,000. So that's where I see, and it's got the same demographic as what I would consider the blue chip suburbs to house in Cairns. So I see those blue chip suburbs of Townsville still having a lot of wiggle room to push up when you start to compare demographic to demographic, and there's still a lot of good value in those median house prices there in those blue chip areas. So look, I still think Townsville, yeah, despite that median house price sitting at 594 and it doing double digit growth, huge double digit growth over the last 12 months, I still think it can rise. But we can see here that, the numbers, why they've been the way they have been over the last 12 months. On the demand side, we can see here that days on market still sits at 28 days. And when you compare this to this time last year, it's actually down by 9 days. So this time last year was at 37, which is still very hot. Now it's at 28 days. And that's really hot, guys. So if you are looking to buy in Townsville still, like the ship hasn't sailed and demand is still very hot. And if you are buying there, that means that 28 days right now, on average, that means that most properties are going under contract within the first couple of days. Like they're literally being snapped up and consumed by the market. So you got to be really quick there if you are active in this marketplace looking to get in, because properties are moving very fast. Like we're lucky, like me and my team, we get access to heaps of pre and off market stuff there. So a lot of the stuff we buy in Townsville there through our connections and relationships, we're getting stuff in advance of market. But if you are trying to buy there, you just have to be super fast and try and do all your due diligence or everything in advance, or do it after you put a contract on the property. Try and get it done within that 5 day cooling off period, all the necessary due diligence, because you won't have 1 or 2 days to muck around and research this or do that, negotiate with the agent. You have to try and get something under contract as quickly as possible. Now, we looked at that days on market. So demand has increased from this time last year, and now stock levels sitting at 0.2 currently. So when you compare that to this time last year, there's actually 69 less listings. And 69 less listings, that's not a small number, that's a big number. So like we've seen demand increase and now stock levels get even tighter in Townsville. So I think the correction is still on its course, which is good. So you're not late to the party if you are someone that was like, oh, should I invest in Townsville this year? Look, let me tell you this. Look at this data right now, and it's definitely suggesting that, yeah, you're not late to the party. And you can see here that inventory level is sitting at 1 week. So, yep, tight as it comes. Again, I'll put that in the 1% basket across Australia for inventory levels. And if you actually compare that to this time last year, inventory levels are at 1 month. So yeah, just that pool of properties have just shrunk. Demand has increased. Listing volumes have decreased. Like it's showing all the right ingredients for me to have a big 25 in terms of the median house price growth. Now on the rental side of the market, I might not be as opportunistic. Um, on the rental side of things, largely due to this vacancy rate. I'll get to that in a sec. So we can see here that looking at the last 12 months, rents have increased 6.6% from $448 to $478 per week. So there's been about a $30 increase there. Um, it's still a very affordable rental market. I think it's one of the most affordable rental markets compared to the other big regional hubs across Queensland we've just touched on. I still think Townsville is still very cheap, and the median rent should be really. I think it should be a minimum $600 per week, and I think it'll get there eventually. But I think it'll get there in the next couple of years, because one of the things I am worried about is what I'm seeing right now is the current vacancy rate. So the current vacancy rate in Townsville is 2.2%, and it's actually up from 1.6% last year in January. So we've actually had a spike in that vacancy rate, and that means that there's, compared to this time last year, an extra 72 more listings in Townsville. And that is a little bit of a worry, right? And look, I think the investors can have a lot to do with that. I think the flurry of investors have bought up a lot of the stock there that would otherwise be an owner occupier. That property is now being put on the rental market for a renter. So there's been that additional supply of saturation into the market. I think we might be able to see a really quick shift in Townsville, because I know a lot of new army personnel are moving into the area, and that would become consumers of the rental market. So we might see this vacancy rate shift very quickly. But if you are investing, like I'm saying, I think the market is really tight, and we're going to see capital growth. But then from a rental side of things, this is something you have to just keep an eye out, or be slightly concerned about, because there's no use buying in there if you're going to get this massive growth over the next 12 months, but you're going to have like the property vacant for weeks on end trying to get a tenant in there because the vacancy rates have ballooned out. So that's just something you got to keep an eye on. And again, I'll be jumping in and looking at Townsville in the next couple of weeks, doing a deep dive, and we'll actually look at the vacancy rate trends, because it'll be interesting to know if last year the vacancy rate started at 1.6 and it dropped below 1 and then it creeped up again, or if it's just always maintained that 1% or above trend and then it's just spiked up because that would be, a concern if it's always been above 1% and it's now starting to spike. Because the last thing you want to do is see that go from sort of 2.2% to 3% to 4%. Because yeah, you're going to have a hard time there renting your property at a premium, despite it being a great market to invest. There's no use investing there if you can't get the rental returns necessary to even hold the property in the first place. So yeah, that's sort of what I'm thinking for Townsville. I'm thinking double-digit capital growth, and I think on the rental side of the market, due to this current vacancy rate, I'm thinking single-digit growth for 2025. But again, if you have any questions pertaining to Townsville, leave a comment in the comment section. I'll circle back and we'll get that answered for you. All right, now going into the last regional hub we're going to look at today, which is Cairns in far north Queensland, 4 hours up the road from its big brother in Townsville. So Cairns currently has a median house price of $662,000. And then we can see here that over the last 12 months, it's done 7.6% in growth off the base of $615,000 to $662,000. So a total of $47,000. And look, guys, I just want to note that this has happened despite last year in December, Cairns being hit with massive floods. Like Cairns was smashed with a cyclone, Category 3 cyclone, and was flood affected for the best part of a couple of weeks, and it really smashed the place up there. And I know over the last 12 months there were about 1,400 households displaced as a result of the cyclone, and there were about over 3,000 um, claims lodged with various insurance companies. So, like everything suggested that Cairns, as a result of that natural disaster, was going to go backwards in 2024, but in fact, it's done quite the opposite. It's had a growth rate of 7.6%, and in fact, what you'll actually notice is that all the suburbs that weren't flood affected, which is the ones mainly on the south corridor of Cairns, they've done some double-digit growth because a lot of people then went, I'm not going to live in these parts of town where there's floods. I'm going to push into the areas that weren't affected at all, and they've really skyrocketed as a result. So the market, despite what's going on of late, has really showed some backbone and pushed along, and it just goes back to the fundamentals of property. When there is demand and really low levels of supply, we're still going to get that house price friction, and property prices are still going to go up. So that median house price of 662,000, like I still really like that. I still think there's a lot of affordability in Cairns. Cairns being a massive lifestyle destination, it was really popular during that sort of COVID-19, post-COVID-19 era where a lot of people from the interstate markets pushed in and really flooded, particularly the northern beaches of Cairns, and accelerated their lifestyle plans and pushed in and really drove up those median house prices on the Cairns northern beaches. We're still seeing a lot of net migration push in from intra-regionally, but interstate again, Melbourne and Sydney, flooding into this tropical lifestyle destination, and that's really attributed to this median house price push as well. And this again, why I really like this is because with that population movement coming in from those southern markets, it's still a very affordable market to them because they're selling their houses for $2-3 million and then moving up into these areas and buying cash, and they're still putting pressure on these house prices because when they're buying cash, they're generally paying 1, 2, 3% over asking to secure these properties with cash, and it's putting pressure on these house prices and continuing to push them up. So I still think Cairns has a lot of wiggle room when it comes to this median house price because it's still affordable for those that are buying here for lifestyle reasons. And I think there's still certain suburbs in Cairns where it's still very affordable to get into for first home buyers and even investors, where I still think there's a lot of wiggle room for those median house prices to push up. And then those areas that have a premium attached to them, like the inner middle ring of Cairns, suburbs like Edge Hill, Stratford, Bridgemead, Canimbla, like they're extremely tight held suburbs, and they have really finite amount of supply. And as they get more and more expensive, like the broader Cairns is going to continue to expand out to push up because those little small scarce pockets are just rising so high that due to affordability, people are pushing out into these other markets. And I'm really bullish on the south corridor of Cairns. Actually, I have been now for the last 2 years. I still think a lot of those suburbs have tremendous value if you are looking to invest in Cairns. Now, as I said, the market was, it managed to do 7.6% growth last year despite a cyclone. Now, let's have a look at the data now and see what's likely to happen in 2025. So we can see here that demand from a days on market perspective currently sits at 55 days, and it's actually up 30 days from 25 days compared to January last year. So like January last year was extremely tight, and then we were obviously hit by that cyclone, and then that obviously extrapolated out or ballooned out that days on market date. I think it went from 25 and jumped to around 40 after the cyclone. And then if you actually compare now, what the average was throughout 2024, which was about 35 days, it's now jumped even higher from 35 to 55. And look, this is something if I am looking to buy in Cairns this year, if you are as an investor, to keep an eye on, because we might be seeing here a potential slowdown in demand, particularly with such a large jump, right? To go from 25 days last year to now 55 this year, like, is a bit of a worry, and it will be something to keep an eye on, because if you have demand slowing down and let's say stock increasing, then we're start to see, the market really starting to balance out rather than see an imbalance. We're starting to see a balance where stock is high, demand is high, and the market's gonna probably start to flatline or retract. So let's have a look now what stock is telling us. It's saying stock on market sitting at 0.3%, which means that there's, compared to last year, 83 more listings than this time last year. I probably don't want to read too much into that, because after the cyclone last year, like, not many people went on and put their houses on the market for sale. Like, Cairns was still in that cleanup and recovery phase this time last year. So I'm not going to read too much into that. But if you are looking to invest here, I'm going to, again, similar to these other markets, do a more deep dive into Cairns in the next couple of weeks. And I'm going to be looking at that stock or market trend. And if we're seeing a trend that's no longer going down, but it's starting to rise, and it has been rising over the last couple of months, then that's something to be concerned about. Because what we're now seeing is stock increasing compared to this time last year, potentially, and then demand slowing down. So that means that we might see a slowdown in this median house price now, and the market start to potentially flatline here. So that is something to keep an eye on there, guys. So we can see here that current inventory levels now sit at 5 weeks compared to last year in January, which was 1 week. So this is very interesting, guys. So we now have 5 weeks now, 1 week last year. So all of the data for Cairns right now, as we speak, probably isn't looking the best, right? Isn't looking the best for me to say Cairns is gonna have a really good year, because we can see here inventory. That means that the pool of properties have gotten fatter, stock levels have really increased, and days on market and demand has really dropped off. So I'm not liking what I'm seeing here overall, guys. 5 weeks. 5 weeks, that just means that, yeah, it'll take roughly 5 weeks for all of the inventory to be cleared out there, compared to, let's say, the other markets we looked at. A lot of them were sitting at 1 week, which what Cairns was last year, and now it's ballooned out. So it is a bit of a worry there, with stock increasing and this inventory pool fattening. And if that demand continues to fall away, we might have too much supply and not much demand, and yeah, that median house price will slow down. From a rental market point of view, we can see here that year-to-date rent has increased from 3.1%, has increased 3.1% over the last 12 months, from $565,000 to $565, not thousand. Oh, that'd be nice, wouldn't it, as an investor, to $583 per week. So Cairns is actually a really strong rental market, and it had a really tight vacancy rate over the last couple of years, like well and truly below 1%, and it's really put a lot of upward pressure on those rents, and that's why the rents are like really strong there. Like, Cairns is probably one of the more expensive rental markets in regional Queensland. And look, I still think that rental market has a little bit of wiggle room to go up this year. But we'll have to really keep an eye on that vacancy rate. I think that vacancy rate contracts to below 1% again, I think we might see ongoing rental growth here. But like, we recently had purchased a property late last year, December, for an investor in Bentley Park, South Cairns, and at that particular time, we put the property on for rent for $620 per week. It sat on the market for 2 weeks, and then it had to be rented for $600 a week. So we had to actually adjust the price down, and that's slightly due to that vacancy rate being slightly higher than what it was in the past, and it just meant that that property that we bought wasn't exactly getting that premium rent that we would have liked, and it's attributed to that. And if that vacancy rate continues to go up, then it's got to be something you have to be worried about if you are an investor. Um, that's all. But if you can see, like compared to last year, it's actually up from 0.9% in January last year. So the vacancy rate has started to balloon out. So there's actually, at this time last year, there were 36 less listings. So that is something to certainly worry about there, guys. But look, I still think Cairns, due to sort of the lifestyle amenity that it offers, I still think it's relatively affordable. I still think there is a lack of new supply in the pipeline. I still think, despite the data looking pretty grim right now, I still think Cairns will do some really good numbers this year. I think Cairns will do single digit growth this year, and I think the rental market, will do single digit growth. So, um, yeah, if you are looking to invest in this market, I think that's what you're in for in 2025. And I think from a single digit growth point of view, I still think it'll get around that 7-8% this year. And look, if it can do that year on year for the next 10 years, like as an investment, like you're doing really, really well there. But yeah, for it to do double digit, I just probably don't think there's enough. I'm not seeing enough here yet to indicate that it will do double digit growth in 2025. But if you do have any questions pertaining to Cairns, leave a comment in the comment section. I'll circle back and answer that. And I am diving in and doing a more deep dive in Cairns in the next couple of weeks as well, guys. Cheers. All right, thank you, family, for hanging around. If you've managed to watch the whole presentation and market update, I really appreciate you. I really hope that you've got the value that you need from that to help you now go on to make a more informed decision when buying in regional Queensland, and yeah, help you along with your journey for 2025. But again, my name is Troy Bassini. I am the owner and head of research of Life Buyers Agency. We are the regional Queensland specialists. They do call me the king of regional Queensland. And look, if you need a hand, and if you are struggling to buy and you want to buy the better quality assets in the marketplace, you want to be in the top 5% of investors in regional Queensland, feel free to reach out to me and the team. More than happy to connect you up with some really good quality assets. You can give us a call on that number, visit us on those websites. Yeah, and look, happy to have an initial discussion first, see if we might be able to add value, and then we can go from there. If you did like this video, feel free to like, share, and put this on various forums or chats and get the word out there, guys, because again, this is free content. No other buyers agents does this sort of analysis, gives this sort of insight and information away for free. They all tend to keep it really close to your chest, and I just do it purely for the community service that I want to put out there into the ether. Anyway, guys, again, thank you for tuning in, and I'll see you on the next video. Cheers and good night.